WTI futures opened this session drifting higher. Price action seemed a little bit cautious. News flow from Morgan Stanley projecting that in the second half of this year, a 500,000 barrel worldwide deficit and a price of $137. Goldman Sachs, on top of that, looking for tighter markets in crude with China, uptick in travel, and as production slows in Russia. Also news from Libya, May production, the smallest it's been in over a year, actually a year and a half. And also Saudi Arabia raising prices for July delivery to Asian buyers a little bit more than expected by $2.10 a barrel versus $1.50. Also had decent numbers coming out of both Japan and the Eurozone. Both had final GDP revisions were up on a quarter-over-quarter and a year-over-year basis. The dollar is basically unchanged, not doing a whole lot to the price of oil at this point. Get into the mid-session. We had a mixed EIA report, but price action sure skyrocketed to the upside. On the positive side, gasoline unexpectedly dropped 812,000 barrels. They were expecting a uptick of 80,000. Cushing supplies dropped by 1.59 barrels. On the negative side, crude inventories rose 2.03 million barrels. Consensus expecting a draw of about 2.5 million. And distillate supplies up 2.59 million, well above the 600,000 consensus. That said, traders definitely know that inventories in a 5-year average are still 14.8% below, and gasoline stockpiles down about 9.5%. That said, production unchanged at 11.9 million barrels week over week. Looking at options, I look at CME Group CVOL. July trading in the 20th percentile. At the money vols are slightly lower, although skew is higher as the down variance is down a lot more and the up variance actually is unchanged. Volume is clustered in the options, 119 half, 120 strikes. Also seeing volume in the 121 call and 118 put. Lastly, CME Group E-Micro Mini Futures trading very heavy today. Yesterday's volume was 85,547 with an open interest of 15,351.